Dale here from AAA Financial Group. Again, we're going to touch on self-managed super funds. So I thought I'd talk through a bit more rules. Borrowing inside a self-managed super fund is legal, but it's also heavily regulated. The ATO enforces quite a few rules, so there's a sole purpose test. Now, the investment must strictly be for retirement purposes. There's also an arm's length transaction test. All dealings must reflect market rates and conditions. In-house asset rules, so you cannot rent the property from your partner, from your family. It must be an unrelated party when it comes to residential transactions. When it comes to commercial, it's a little bit different. A business can occupy the commercial property that's owned by the self-managed super fund, and the commercial property would receive the rent from the business, which is then paid to the fund. No improvements, which means you can't borrow money to be able to upgrade the property. You can technically only borrow it for essential repairs if something's been damaged to get it back to a habitable standard. Some other things to consider is you can't use the equity in that property if it's grown. So if I buy a property in my personal name and it grows in value, I can leverage that equity to buy another property. Inside of self-managed super funds, if that property grows in value, it would need to be sold, you'd need to take the cash, and then you'd need to buy again. Breaking these rules may trigger some hefty fines, some defaults, and tax penalties. We can look at that assessment for you. That's not something you need to worry about. When it comes to the documentation side of things, we as AAA have up to 10 lenders that look after self-managed super funds. So we are happy to look at full doc and low doc type transactions for those that are self-employed. As always, any questions, give us a call, here to help and happy to chat.